Hello everyone and welcome to ICM's midday session. So we're witnessing a bit of volatility on the day. The dollar is trying to get back some of its losses incurred yesterday, while indices are almost hovering in the same place, and gold is losing ground relative to what happened during the Asian session. So in terms of economic indicators, we had the jobs report from the United Kingdom. Mainly, we had a better than expected average earnings income, and also the claimant count declined by 29,000, which is also a bit optimistic. While we need to remember also one of the important things that's happening in the markets today, the money markets are pricing in the negative rates for the Bank of England in July. Previously, they were in May, so this is also giving a little bit of a push for the British pound across other major currencies. Moving to Germany, we had the ZEW economic sentiment, which fell to 39. It's among the slowest readings in the past couple of 7 months. So this is hinting to a lower sentiment in the Euro region following the restrictions that were taken to cope with a second wave of coronavirus. So now let's move to the charts to highlight what's happening in terms of price action. So we had a short move yesterday on the euro dollar, falling from almost 1918, which was the previous the first stop where the euro dollar tumbled back then. So you can see here how exactly it was the previous stop. So a couple of times this resistance level was valid in the market, first two times and then another time, and then here we had a bigger reversal. Also on the daily chart, you can see a short bearish candle, and this is continuing in the price action today. We had a bit of a consolidation move, and now we're continuing forward. So this is almost was a flag to which is a continuation pattern. What could be coming next? So the previous resistance, which is turning into support near 1770, is a key area now. If we were able to extend losses and trade below this area, we will be exposed to further downside towards 6090, which was also a key support during early October. So watch out for any break back below 70, since this will add more bearishness on the outlook for the pair and drive prices lower. However, on the alternative scenario, if we move back to trading inside the consolidation range that we're trading in earlier during the Asian session, earlier during the European session, so trading back between 1840 or above 1.18, between 118 and 118.50, this could add some momentum again to the market and retest the previous stop. So we need to highlight the resistance of almost 1850, or the upper line combining the recent tops and the previous one near almost 1918. So these are the key levels if you are trading the euro against the United States dollar. The indicators are also showing this short move. So we see here how the 100-hour exponential moving average acted as key support, and when it was broken, we are trading now near the 200-hour exponential moving average. The RSI is closer to the 30 level, but this doesn't mean that we are oversold currently. So this could leave room to further declines on the pair. Moving to the British pound against the US dollar, we're seeing a bullish rally on the pound relative to dollar, just setting to previous highs, which we were talking about, near almost 32.70. If we just go for a bigger time frame for the daily chart, you can see that we're closing into the area that was key back in August. So we had almost 4 trading days in the same range. We're now trading near the upper side of the range, near almost 32.60. So watch out for any resistance near this key level here, 32.60, ahead of any break to the upside, where we can also point to a possible resistance near 33.50. So if we just go back to the hourly chart, this could be clear here for you. So these are the key levels that we could be trading at for the British pound. However, any drop back below the previous resistance near 31.70, any drop back below 31.70, or again 30.90, lead to further bearishness on the pair. This could be driven by any headlines concerning Brexit. However, the recent headlines, they're a bit positive, and this is what's driving the momentum in the market. The dollar against the Japanese yen, it's continuing its move to the upside following yesterday's rally. We had a correction, and now we're still in the move. So if we just go for the Fibonacci retracement, we almost retraced 38.2 of the gains, and now we're retesting almost yesterday's high near almost 105.70. So if we just we need to just pinpoint the key level that we were always trading near, which is the upper side of the trend line that's combining the previous stops. So we found some resistance near the trend line. Now we're moving back higher again, which could mean that momentum is still available for a second push, and the dollar yen higher towards maybe 106.10 and then 107 level. So these are the key levels on a bullish scenario for the dollar against the Japanese yen. This upside momentum could continue unless we see any significant break back below 104, which we are a bit far away from happening now, since it's almost 150 pips away. So these levels are in the bigger picture for the dollar against the Japanese yen, while the recent correction or recent low near 140.70 remains an imminent support for the coming hours. So on the technical indicators, they're showing that we're trading above the 100 and 200 hour exponential moving average clearly. Where we had a correction towards the 200 moving average, and then we're moving back higher again. Bollinger Bands are wide open, signaling to good momentum in the market. However, watch out for any sideways move near its upper bound, and the RSI is closing into 70 again. The dollar against the Swiss franc, also similar move to the dollar against the Japanese yen. So the dollar is strengthening again. So we need to highlight the previous stop of almost 92 as the coming resistance, and then 92.95. These are the key levels on a further bullish scenario. However, if this area holds here, we could be poised to retest 91.15 level, 91 level, and then further declines towards almost 90.40. So these are the key levels on the intraday. Watch out for any possible strong resistance near 92, which was the previous rejection here. We had two rejections earlier in November near the 92 level. So also here on the technical indicators, we're trading back above the 100 and 200 hour exponential moving H4 exponential moving average. On the hourly chart, also we're way above the 100 and 200, and the Bollinger Bands closed in following a sideways move, but now they're trading back. They're diverging again following the sharp momentum that was taking place during the past 2 hours. Watch out for the divergence that's building. We can see a higher price, but with the RSI posting a lower high. Watch out for any reversal signal with the candlestick pattern, and that could lead to a retest back towards the lower band, which we talked about near 91.13. This is for the dollar against the Swiss franc. Moving to the Australian dollar, still nothing much happening on the pair. We're trading inside this tight range, so you can highlight the lows and the tops for the range and trade the breakout out of this range. So any decline back below 72.40 could lead to further drop and bearishness towards key levels 71.60 and 70.60, while further upside movement on the pair could lead to a retest to previous highs almost near 74.30. So we had the clear rejection from the previous high. So if we just check the previous high here, we had a clear rejection from this previous high, and now we're trading inside the straight-in consolidation range. Any decline back below 72.40 could lead to further bearishness and another drop towards 71.50, 71.70 area. The New Zealand dollar, we have an incoming event, the Reserve Bank of New Zealand interest rate decision. There are no expectations for the bank to change anything in policy. The New Zealand dollar was among the strongest performers against other currencies, and we're currently consolidating inside the range near the top levels. So watch out for continuation, since we're building a slightly similar to a continuation pattern here. So watch out for how this will come and play in the coming hours. However, traders could be just a bit cautious ahead in taking any trades ahead of the Reserve Bank of New Zealand interest rate decision. So 69.40, which was the previous stop that we highlighted earlier, is a key level for traders. And on the downside, any dip back below almost 67.80 level, which was the previous stop, 67.95, could lead to further declines on the pair. Also here, the hourly chart, you can see the Bollinger Band is just closing in, so the width of the bands are just lessening due to the sideways move. This is definitely a signal that traders are just awaiting further clarification from the Reserve Bank of New Zealand. Also, the RSI is in the neutral mode near 50 level. The dollar against the Canadian dollar was able to recover following yesterday's sharp drop. The Canadian dollar was also among the strongest currencies, driven by strong rally in oil prices. However, the dollar recovered, and now we're trading almost near the upper side of the Bollinger Band. Watch out for possible resistance near the 100-hour exponential moving average and 200-hour exponential moving average. So this area here could bring some possible resistance, especially that the 31 level was previously key support level. So this area here could be poised for sellers again, while any drip back below 29.95 or the 130 psychological level could lead to a retest or a continuation of yesterday's move and a retest towards the 129.30. The RSI is closing into the 60 level. We're now almost near 58, so watch out for any selling for the rallies that could be taking place. Gold prices were able to correct towards almost 38.2 of the wave lower. So if we just highlight what's happening in gold, you can see the move that took place yesterday. So almost we fell towards 38.2. We had a similar channel formed during the trading hours in Asia, and now we were continuing lower. However, the prices still found some support slightly near 1870. Watch out for any sideways move here between a bigger range almost near yesterday's low of 1850 and 1890. So we can be poised for a sideways move here until we have further clarifications on other drivers coming in to drive the prices away from the consolidation range that we're trading at. If we just add the technical indicators, you can see on the hourly chart that the 100 and 200-hour exponential moving average, they're close to each other. The Bollinger Bands, they were very wide due to the strong momentum that was taking place yesterday, and now we're trading back into almost normal activity. Silver price is also similar to what we witnessed on gold. So we still need to highlight the support zone near almost 2350 and the previous one 2260. So these are the levels on a further downside for the bullion, while any break back above today's high 2440, which is coinciding with the 100 and 200-hour exponential moving average, could lead to further rally and a retest of almost 26 is a bit far away, but maybe we can go to almost the middle range. So somewhere between 25.20 for an ounce. The Dow Jones is regaining strength following the drop. So we can see yesterday the Dow 30 traded above 30,000, while the futures were slightly short of posting the 30,000 as record. And we witnessed a clear correction. Almost 78% of the rally to the upside was corrected. And now we're trading inside a sideways move for the past couple of hours inside the bigger candle that was taking place yesterday. So if we just remove these indicators, so you can highlight yesterday's sharp move as a key level to trade out in. So you can set this range for trading, and you can trade this range as long as you don't have any new movers in the market. We could be trading inside this almost 1,000 points range. So watch out for how the market will come and play today. We have smaller ranges building on the day. So on the past 2 hours, we've been trading inside the range of almost 250 points. So watch out for any break above this one could lead to a retest. So it's just that you highlight the tops and bottoms that are trading inside this range, and you can trade the breakout from these tops and bottoms. The WTI lost some strength following yesterday's rally, but still now it's aiming higher again. We had a big correction. Now we're trading back in the same direction. So any break back above 41, I'm just gonna highlight it on the bigger time frame. So any trade back above yesterday's high, which was almost the resistance that capped any upside move in the market in September, could lead to another rally, another strong rally towards almost $44, while a reversal and a drop back below 39.70, which was a key support on the day and key resistance previously, could lead to further declines towards almost 37. So this is all for today's session. What's coming ahead, the jobs opening from the United States, and during the Asian session we have the Reserve Bank of New Zealand monetary policy meeting. I'd just like to remind you that all the information, news, analysis, and opinions mentioned in this webinar, in this live update, is just for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. And if you'd like to watch our live sessions again, you can just subscribe to ICM Capital and enable the notification button. This is all for today. Thank you all for joining and have safe trading.